We are moments away from watching $100,000 vanish into thin air. That, my friends, is the dramatic claim echoing across the crypto world today, as the king of digital currencies stands at a perilous crossroads. If you thought Bitcoin's climb to that magical six-figure summit was the ultimate glory, brace yourself, because forces at play could be ready to bring this milestone crashing down. Why is it so dangerous to stand on the edge of $100,000 per Bitcoin right now? Today we will dissect this thrilling drama, step by step, revealing how a single technical marker known as the so-called death cross might shift the balance, what the big players on Wall Street are really up to, and why ordinary investors are holding their breath in anticipation. In this episode, we will dig deep into the underlying mechanics of what is pressuring Bitcoin's price, how the recently spotted weakness on daily charts is shaking the confidence of both seasoned traders and wide-eyed newcomers, and the curious role of exchange-traded fund flows in pushing emotions to a fever pitch. Is Bitcoin about to lose its grip and slip into the so-called death cross formation between the 23-day and 50-day moving averages? Could that dreaded pattern press the price all the way down to the 200-day line near $95,868? And most importantly, are we witnessing the first crack in an otherwise monumental rally? Or is this a routine pause on Bitcoin's unstoppable march into the future? Let's turn back the clock for just a moment and remember what got us here. Only a short time ago, the idea of Bitcoin hitting $100,000 seemed every bit as far-fetched as colonizing another planet. And yet, persistent hype, waves of speculation, major institutional entries, and unstoppable narratives about digital gold kept fueling the climb. In the minds of many, $100,000 was a line in the sand, the big dream that seemed destined to change public perception forever. Bitcoin, no longer an outlier or a fringe idea, but a mainstream phenomenon commanding the absolute respect of both retail enthusiasts and traditional financial titans alike. Now, however, that entire narrative sits on a razor's edge. The difference between mass euphoria and a tide of fear can hang on the smallest shift of a technical chart. The real heart of this unfolding drama is the so-called death cross, a situation where a faster moving average, in this case the 23-day moving average, crosses below the slower 50-day moving average. For anyone new to technical analysis, these signals are telling because they often represent a potential pivot from bullish momentum to a bearish downturn. Historically, that pattern has triggered swift downward moves, prompting careful watchers to pay close attention. Combine that possibility with Bitcoin's psychological magnetism around the $100,000 mark, and we have the makings of a genuine suspense story. Nobody likes to see a hard-fought milestone brushed aside, but the tension is mounting. Observers forecast that, should the death cross confirm, the price of Bitcoin could tumble to the mid-$90,000 territory, potentially testing the 200-day moving average near $95,868. In other words, the $100,000 threshold is at risk. What's so special about moving averages anyway? Think of them like the asphalt on the well-traveled highway of price trends. When short-term and long-term highways intersect at the wrong angle, like the dreaded death cross, traffic can slow or even come to a screeching halt. Right now, the biggest question is whether this traffic jam is truly forming, or if it's more like a short construction zone that drivers can navigate without too much trouble. Macro events, institutional inflows, and a swirl of rumors surrounding exchange-traded funds may all have temporary or lasting impact, intensifying the pressure on this crossing. As you see, each wave of panic or exuberance can accelerate the speed with which these lines converge, thereby making the future that much more uncertain. The fascinating part is that among the passionate believers, $100,000 was supposed to be an unshakable fortress. Yet, this new market environment hints that fortresses can and do crumble, a lesson that has repeated itself many times in the history of assets, from traditional stocks to foreign exchange pairs. If you want to see more deep dives into how these price thresholds can shift from dazzling hopes to painful disappointments, give this video a thumbs up to let us know you're as enthralled by the roller coaster ride of crypto as we are. Now, let's explore another dimension of this story, that strange marriage between advanced chart reading and all the big headlines swirling around. Because Bitcoin has become a headline magnet, the general public often reacts more strongly to shocking announcements than to slow-moving changes in price momentum. Yet, behind the scenes, these moving averages, the seemingly staid lines on a chart may tell a more consistent story. While front-page news might proclaim the unstoppable triumph of digital currency, more technically inclined watchers are quietly pointing to that downward slope of the 23-day line. If that line dips beneath the 50-day marker, we might see a domino effect, spurring a wave of sell orders. That, in turn, can transform a small crack in Bitcoin's armor into a more significant price retracement. Crucially, what might seem like a normal fluctuation could turn into something bigger if the crowd consensus shifts from buy the dip optimism to genuine fear. After so many months of unstoppable momentum, does the market still have the confidence to hold on to positions? Or will we see leveraged traders who placed big bets at or near $110,000 or $105,000 start to close their positions in a hurry if the price breaks down toward $100,000 and beyond? That's the cliffhanger that everyone is watching. Too many quick exits at once would almost certainly accelerate Bitcoin's fall to that 200-day average, a level that technical analysts traditionally see as a crucial line of defense. Even if that line around $95,868 is tested, it is still historically seen as a place where buyers gather. Could that turn into a real battleground between bulls and bears, with large positions stacked on both sides? Quite likely. In fact, many pockets of the crypto world are already discussing an epic standoff. If the dreaded cross does materialize, we might see a blend of short sellers, fearful of further drops, pressing their advantage. Meanwhile, staunch believers rebalance, pivoting fresh capital into the market, convinced that this moment represents merely a typical reversion to the mean before the next giant leap forward. Either scenario could happen, and that is precisely what keeps watchers glued to their screens. Let's not forget, every dramatic story needs an unseen twist, a factor that might come from nowhere to rewrite the script. Currently, speculation about regulatory approvals or denials for major Bitcoin exchange-traded funds holds the potential to sabotage or energize the market. If regulators give a green light unexpectedly soon, the price might defy all standard chart readings and surge once again above $100,000, rendering the death cross moot. On the other hand, negative guidance or higher scrutiny could sap the confidence needed to keep the 70-day, 100-day, or 200-day lines afloat. That interplay between official policies and technical signals becomes both mesmerizing and nerve-wracking. All the while, the everyday investor is caught in the middle, trying to figure out if it's better to panic or hold on for dear life. The clamor on social media is building. You hear voices proclaiming that Bitcoin is finished, while fanatics retort that every dip is the chance of a lifetime. The truth, as usual, might lie somewhere in the middle. As the tension ratchets up, many people are reflecting on how quickly fortunes can turn in the crypto sphere. After all, in bull runs past, it was not uncommon for Bitcoin to drop by 10 or 15% in a single day before roaring back with renewed vigor. The crucial difference is that big round numbers like $100,000 tend to magnify the emotional stakes. Losing such a psychologically salient level might spark bigger waves of uncertainty than losing, say, $107,000 or $98,000. Remember, as enthralling as these patterns may be, a larger macro backdrop also looms in the distance. Economic signals from major markets, global interest rates, and ongoing concerns about inflation can all tilt the balance. When the Federal Reserve or other central banks around the world make a statement on monetary policy, the ripple effects can seep into asset classes once believed to be uncorrelated, including cryptocurrencies. The question is, will the global climate provide a tailwind or a headwind? If the overall environment sours, we might see capital flight into safer zones, pressing Bitcoin downward. Conversely, if new signs of optimism appear, crypto might prove surprisingly resilient. The storyline grows more elaborate by the hour. Another key factor we must not ignore is the role of hype. As many who have studied the markets will tell you, perception can become reality. If too many headlines run with warnings of doom, fueling the notion that Bitcoin's days above 100,000 are numbered, it can escalate a self-fulfilling prophecy. People hear it's dangerous, they run for the exits, and that dash for safety ensures the price does indeed drop, further feeding the storyline. Yet, the irony is, if the rumor mill turned just as dramatically bullish, we could see a different reality where the taps of big money from institutional players turn on again, driving the price well above $110,000 and making the notion of a death cross look trivial. Then there's the matter of altcoins, smaller or so-called alternative cryptocurrencies, which also hold potential to sway Bitcoin's fate. Sometimes, an altcoin mania can overshadow the leading coin, drawing away capital and attention just when Bitcoin might urgently need that liquidity to hold $100,000. Alternatively, a robust altcoin rally can reflect a wave of renewed confidence that eventually spills back into the premier digital asset itself. In short, the entire crypto ecosystem weaves an intricate tapestry where each thread can either anchor the flagship or let it loose. As soon as excitement or fear in one corner spreads, the entire mosaic shifts. Still, the single biggest immediate question remains: will that 23-day average cross below the 50-day line any day now, sealing our protagonist's doom, or at least forcing it to fight in the trenches of the 200-day line near $95,868? Or will the bulls rally at the last moment, valiantly defending the six-figure mark as the chart lines narrowly avoid that ominous shape? The tension is enough to keep even the casual observer on the edge of their seat. If you find these twists and turns as exciting as we do, consider subscribing to our channel so you never miss out on the next mind-bending moment in this ongoing crypto epic. What deepens the plot are the shifting narratives from different commentators. Some note that not every death cross translates into catastrophic selling. Sometimes we see a quick recovery, a bounce so swift that by the time most people notice the cross, it's already being reversed. Others argue that it takes time for the trend to truly fulfill its pattern. So, even if the cross forms, it might be days or weeks before a major move reveals itself in full force. This unpredictability leaves plenty of space for speculation, rumor, and the creation of new memes in the cryptosphere. In a culture powered by speed and social media, the storyline can change from hour to hour. While we fixate on short-term tremors, the question of long-term adoption and the unstoppable wave of digital finance also deserves attention. Even if Bitcoin dips below $100,000, is that actually the end of the world? Hardly. Bitcoin has been this low or even lower for most of its existence. What counts is whether more institutions and mainstream users keep marching in. If the fundamental demand for a decentralized, borderless asset remains, then we may be looking at a temporary bump on a journey to higher peaks in the months or years to come. Yet, timing and market sentiment matter a great deal, especially for those who have staked positions at or above the six-figure threshold, taking a leap of faith that the rally would continue without interruption. Let's also recall the role of psychological levels in shaping market outcomes. When a big number is broken, on the upside or to the downside, it can act like a magnet for future price movements. The reason is simply that a large swath of market participants fix their eyes on these round figures. If Bitcoin convincingly loses $100,000, people will examine the high 90,000s. Does the price bounce at $99,000, or does it drift quickly toward 98,000 or 97,000 or even lower? Each of those thresholds can generate mini-dramas all their own, where watchers weigh whether a bounce is strong enough to recapture 100,000. The key difference with a looming death cross is that it can amplify and accelerate these moves with more force than casual holders expect. Given all of this, it's crucial to stay level-headed. The future might hold a swift plunge, or perhaps a surprising surge. This unpredictability is exactly why so many are hooked on Bitcoin. No other asset in recent years has managed to capture the world's imagination in quite the same way. Prices shoot up rapidly, pulling in new believers, then swirl downward just when the crowd gains maximum confidence. The cycle repeats, forging new stories, new winners, and new losers. Ultimately, whether you see this death cross as a final warning or a false alarm may say as much about your personal convictions as it does about the data on the charts. Another aspect that ties into this entire narrative is how quickly the macro conversation can flip. If we see major improvements in the global economy, more disposable income might flow into the cryptocurrency markets, propping up Bitcoin at lofty levels. Alternatively, if global tensions or negative economic news spook big capital, then risk assets like Bitcoin often feel the impact first. It is in those moments that technical signals, like our dreaded cross, become extra potent. Everyone wonders if the sign from the chart might morph into a self-fulfilling prophecy, as anxious investors run for safer grounds. Toward the end of our exploration, it is prudent to remember that for some, Bitcoin is not purely about charts, lines, or big psychological thresholds. To them, It represents a technological revolution, a hedge against conventional finance, or even a symbol of personal financial sovereignty. Those people might see any correction as an opportunity to accumulate more. Still, the short-term drama around $100,000 is all too real when entire fortunes on margin or leverage are at stake. Hearing the phrase $100,000 is in danger can rattle the nerves of novices and veterans alike, especially if they poured substantial capital into the asset without a clear risk management plan. So, here we stand, perched on the precipice of what might be the next dramatic turn in Bitcoin's ever-evolving saga. Will the price slip beneath that fabled six-figure threshold, fueling another wave of panic and sealing the dreaded cross? Or will Bitcoin stage a heroic comeback that sets social media aflame with triumphant memes of unstoppable growth? Whichever way it plays out, this is a moment where the tension in the market could climax. Considering how swiftly fortunes have changed before, there is every incentive for you, dear viewer, to stay fully updated on the next major developments. If you are excited and want to make sure you do not miss the next big reveal, whether it's a technical bounce off $95,868 or a reversal that charges back above $110,000, feel free to stick around. The story, as they say, is far from over. That, ultimately, is the allure of Bitcoin. Nobody can say for certain what the next chapter holds, and the drama unfolding right now is exactly what keeps the conversation so compelling. As we watch price bars inch toward the lines on these daily charts, we are reminded that even a kingpin asset can be vulnerable if sentiment shifts. Now is the time when the crowd looks for hints. Will the bullish believers ride in to defend that cherished six-figure mark, or will the skeptical sellers tip the scales in favor of a formidable decline? With that said, keep your seatbelt fastened. This roller coaster ride could still deliver one more exhilarating, heart-stopping twist. Stay informed, watch the charts, and perhaps step back to reflect on the big picture. When technical signals unite with global sentiment, we often witness history in the making.